Most investors fail not because markets crash, but because emotions sabotage consistency, timing decisions poorly, and destroying long-term wealth. Today you will learn a simple strategy used by professionals that removes emotion, builds discipline, and quietly grows wealth consistently. This strategy is called dollar cost averaging, and it helps beginners invest confidently without guessing market highs or lows ever. Dollar cost averaging means investing the same amount regularly, regardless of market conditions, prices, headlines, or emotional noise every month. Instead of waiting for perfect timing, you invest weekly or monthly, letting discipline replace fear and greed over many years. This approach works because markets are unpredictable, but human behavior is consistently emotional, reactive, and short-sighted during volatility cycles. When prices fall, dollar cost averaging buys more shares automatically, lowering average costs without stress or panic for long investors. When prices rise, you still invest consistently, participating in growth while avoiding dangerous all-in decisions that often hurt beginners. Over time, this smooths market volatility, reduces regret, and creates a calmer investing experience for ordinary people seeking financial security. Dollar cost averaging works psychologically because it removes decision pressure, preventing impulsive actions driven by headlines, fear cycles, social media. Beginners often delay investing, waiting for crashes, then miss rebounds, repeating mistakes that compound opportunity costs and long-term regret. Dollar cost averaging eliminates paralysis by creating a simple rule: invest fixed amounts on fixed schedules, no thinking, just action. Automation makes this strategy powerful because investments happen automatically, even when motivation is low during busy weeks, stressful periods, consistently. Many investors tie dollar cost averaging to paychecks, investing immediately before money gets spent elsewhere on impulses, subscriptions, or lifestyle. This method makes investing feel affordable, because small regular amounts ensure participation without overwhelming financial pressure for young and new. Mathematically, dollar cost averaging lowers average purchase prices over time compared to emotional lump sum decisions made during market peaks. Many people believe lump sum investing always wins, but only when timing is perfect, which rarely happens for average investors. Dollar cost averaging reduces timing risk, making outcomes more predictable and emotionally manageable for beginners entering volatile financial markets today. Stock markets historically trend upward, but short-term movements scare investors into poor decisions during economic news, crises, and corrections. Dollar cost averaging turns investing into a habit, not a stressful event requiring constant predictions about interest rates, wars, recessions. You can use dollar cost averaging for stocks, ETFs, index funds, or retirement accounts across different platforms, countries, and currencies. Imagine investing $200 monthly during volatility, buying fewer shares high, more shares low without changing your strategy once. Over years, your average cost balances out, reducing regret and smoothing emotional swings from market noise, commentary, predictions, and fear. Discipline beats intelligence in investing, and dollar cost averaging builds discipline automatically without willpower, motivation, confidence, experience, or luck required. Smart investors focus on systems, not predictions, because systems work regardless of emotions during bull markets, bear markets, and sideways. Dollar cost averaging rewards patience, consistency, and long-term thinking over excitement and fast profits promoted by online hype cycles. The biggest mistake is stopping dollar cost averaging during downturns, exactly when it matters most for future returns and recovery. Market drops feel painful, but they are opportunities disguised as fear for disciplined investors who continue investing systematically without panic. Before starting, choose an amount you can invest comfortably without disrupting essential expenses like rent, food, utilities, insurance, and emergencies. Pick a schedule weekly, bi-weekly, or monthly and stick to it religiously for years, ignoring short-term market noise entirely. Most platforms allow automatic investments, making dollar cost averaging effortless once initially configured through banks, brokers, retirement apps, and fintechs. You should review investments occasionally, but avoid constant monitoring, which fuels anxiety and emotional reactions to daily price movements online. Successful investing rewards those who zoom out, focusing on decades instead of days or hours, especially during volatile economic periods. Dollar cost averaging keeps investing boring, and boring investing is usually profitable because it avoids dramatic mistakes, panic, and overtrading. Your friends may chase trends, but disciplined investors quietly outperform over time by avoiding FOMO, leverage, overconfidence, and speculation excesses. Dollar cost averaging is not exciting, but it is effective, reliable, and beginner-friendly for building wealth slowly, safely, consistently. It works by removing emotion, spreading risk, and enforcing consistency regardless of market conditions over long investment horizons for investors. This strategy empowers ordinary people to invest confidently without predicting the future or reacting emotionally to short-term market noise. If you want sustainable wealth, boring consistency will beat exciting guesses every time in real-world investing journeys for most. Start applying dollar cost averaging today by choosing one investment and committing small, regular amounts without overthinking market timing decisions. If this helped you, subscribe to Clark Invests for simple investing education designed for beginners, long-term thinkers, and builders. In the next video, we will build a beginner portfolio using dollar cost averaging step by step with practical examples. Remember, investing success comes from behavior, not brilliance, and consistency always wins over time. Markets, noise, opinions, and predictions combined. Even small steps taken consistently can change your financial future dramatically over years through patience, discipline, learning, focus, and time. You do not need perfect knowledge to start, only commitment to consistency and a long-term mindset toward wealth building. Complex strategies often fail beginners, while simple systems succeed through repetition and time, especially during uncertain economic conditions globally today. Trust the process, trust the math, and trust your future self to stay consistent despite fear, doubt, noise, and volatility. Clark Invests exists to make investing simple, calm, and accessible for everyone regardless of income, background, experience, age, or starting. Subscribe, share this video, and begin building wealth the boring, proven way that actually works over time consistently for beginners. Your future wealth depends less on timing markets and more on consistent action starting today with discipline, patience, and confidence.